I'm going to introduce to some of you for the first time Jennifer. Jennifer lives in Southern California and has been trading for over 10 years. She's taken thousands and thousands of trades from short-term and long-term charts. I met Jennifer about 5 years ago when she was trading a huge account, about a $900,000 account. She had days that she was up 30,000, down 30,000, up 50,000, down 30,000, and there are some great stories about the ups and downs of trading a huge account. She has an enormous amount of experience in what she does in the market, and tonight we're going to have tonight depending on where you are, or this morning for the rest of you, we have the opportunity to hear from Jennifer on one method that she has invented, traded, and that has simply exploded all over Twitter and the internet. There are tons of people sharing these trades with each other. We've already seen trades come through on the webinar question and answer panel, Jennifer, today. So Jennifer will teach the hopper trade. I'll preview the red hopper trade, and you can get a copy of the recording at 15minuteforex.net. You can actually go to that webpage now, click on the red button on the home page, and see the recording from last night's presentation of the hopper and the red hopper. And within the next 12 to 24 hours, we'll have the recording from this morning's webinar available to you as well. Jennifer, it's nice to see you here this morning. Thanks for joining us early in the morning for you. Take it away.
Thank you, Rob. I appreciate that nice introduction. And Boris, it's always a pleasure to spend time with you and listen to you chop up the charts and see what you're doing and how you're trading. And I'm just really honored to be here together with both of you this morning, and excited to share with you some things that I have learned about the MACD and take you into a really simple trading strategy that you can apply immediately. It's very simple. And if you want to go to the next slide, Rob, I will take it from there. This is an introduction picture to the hopper. And when I talk about how simple it is, I want you to know that everything you need to know about the hopper you can see on this one page at a glance. So as you look at this page, I'm just going to tell you a couple of introductory thoughts about this trade, this trading strategy. The reason I have a surfer, picture of a surfer on here is because the hopper trading strategy is similar to surfing. Surfing is one of the simplest things that you could possibly do. You need a surfboard and that's about it. And yet surfing is one of the most complicated sports or recreation activities that you could do. Maybe some of you have tried it, maybe some of you have mastered it, but once you do, it becomes an addiction, and it's an experience like no other. So as simple as it is, it really only requires two simple things. It requires momentum, and it requires that you know the right direction to point your board in. You get those two things right and you're going to have an excellent surfing experience. And what I want to share with you today, this strategy is built around one technical indicator, and that is the MACD. And what the MACD does as an indicator is it gives us some indication about momentum, and it gives us some indication about direction. And in order to place a trade, once again, a complicated, difficult, very sophisticated activity really comes down to knowing how to do two things: enter a trade, exit a trade. That's basically it. So the similarities to me with surfing are just so phenomenal, because in one sense it's just two simple elements, the most basic functions ever, and then it just takes you into this whole world that can be as immense as you want it to be. So what we're going to talk about today in trading is using the MACD as an indication of momentum. So when you're out in the water waiting to take a surf experience, you're not going to get very far if you just stand up on your board, unless you do that at the exact moment when there is some momentum building. A wave is swelling and some momentum is coming, and it sets the whole thing in motion. Similar to that, the MACD is going to help us sense when that momentum is starting to build and when it might become a good time to get into a trade. And the two basic things you need to know to enter or to participate in a trade is just when to exit and when to enter the trade. And the MACD is going to help us, or could help us, with both of those, putting together all of those things, and you have a really simple trading strategy that you can add to your trading life. So you can go to the next slide, Rob. So this is the one-page lesson on the MACD. I've done extensive amounts of study on the MACD, and I really did it for academic reasons And you know, I was really interested in knowing a little bit more about the indicator and see what kind of things I could pull out of it. And what I was really surprised to find is I just have fallen in love with this indicator the more I learned about it. Some people think it's not a very complex indicator. I happen to think it is very complex, but essentially what the MACD does is it calculates changes over historical data, and it kicks out an image that gives us a visual indication of direction and momentum. How it does that isn't important unless you're into the academics of it. What's important is to know that it is giving us a message that's sitting right on our charts, right in front of us pretty much every day. In fact, probably everybody here already has a MACD or is at least familiar with it, if not having it already on their computers every day. So why not spend a few minutes and learn how to gain a little bit of information from something that's already sitting right in front of you that might assist you in your everyday trading activities. So for today's examples, I'm using the MACD settings of 12, 26, and 9. Those are default settings for me. If those are not your default settings, you can change them, or you can change them to any settings that you want. I've been experimenting with different settings, and I don't have much more to say about it than that, but just for today's purposes, everything that you see will be the default settings of 12, 26, and 9. So for those of you that are new to the MACD, just so you understand the words that I'm going to be using today, these are the basic elements. The most important one is the MACD line, which on my charts today is going to be the heavier blue line. The 0 line is actually not a line, although I've drawn it in as a red line there just to draw your attention to this plane or this level, which I call the 0 line, above which momentum is building and creating positive bars, indicating momentum in the market going upwards. And as the bars are building below the 0 line, it's an indication of momentum going in a downward direction. So that's the histogram bars, and then the last line is the little red dashed line, and that is the signal line or the trigger line. And I have lots more to talk about with that, but we're just going to touch on that today as it's a tool for helping us time, possibly time some exits on some of our hopper trades. Okay, next slide. So here is the whole trade setup. When the MACD line crosses from below 0 up into those positive histogram bars up to above 0, that's a hopper. That's the entry of a long hopper trade. That's the point at which we would place a buy. And when the MACD line crosses from above 0 to below 0, that's a hopper to sell. So we've been doing these webinars all month together, me and Rob Booker, and I've been saying when the MACD line goes over the 0 line to go up, or when the MACD line goes over the 0 line to go down, and that's really a lot to say. So now I just say when the hopper happens. So if you hear me say when the hopper happens, you need to understand that that's the point at which we're going to enter the trade, and it's a buy trade if we're going from below 0 to above 0, and it's a sell trade if we're going from above 0 to below 0. So we're looking for a moment when the hopper happens, when the MACD line makes that move over the 0 level, and that's going to indicate our entry, whether we're on a 5-minute chart or a 4-hour chart, and I'm going to show you a bunch of examples of that. So I'm going to show you some examples on the shorter time frame charts, such as the 1-minute or the 5-minute, and talk about a few rules that might help you get started with the hopper. Then we're going to talk about how you can apply it for larger profit targets and larger time frame charts, and the rules might change just a little bit to help you get started. The hopper can actually be applied to any trading strategy that you're currently using. It could just be an assist tool, which sometimes you're sitting there trying to make a decision and you're looking for one final piece of information to help you confirm that you should wait a little longer before you enter your trade, or you should go ahead and take it. And the hopper might be a great new little piece of information that's already sitting on your charts talking to you. So we'll start with the shorter time frame charts. This is for the 5-minute chart environment. And there's a couple things that is going to make your experience more successful. The first thing is to pick a trading session. Wherever you live in the world, you might trade the U.S. trading session, which in New York City would be 8 o'clock in the morning, and the first 3 hours of that trading session, you would expect to see more volatility than the time following that or the time just before that. Obviously, the currency market is a 24-hour marketplace, so it's not like waiting for the open of a trading time. But I think of it like the open, because at the beginning, when business picks up, you can expect to see a little bit more volatility. Volatility is that momentum, and when you go surfing, you can't really do much if there's no waves in the water. So you want to look for, pick a time to do this when you might expect to see a bit more volatility. So once I pick the trading session, I'm looking for hopper trades on the 5-minute charts for just the first 3 hours. And usually it's the first hour of the trading session, and then the trades can last sometimes for the following 2 hours, depending on what kind of activity is going on in the market. Sometimes we have ranging activity during that time. Price is just up and it's down and it's all over the place, and at the end of 3 hours it really hasn't gone very far. And other times price might take off and demonstrate a little bit of trending activity, which trending activity on a 5-minute chart might look something totally different on a 1-hour chart even. So I don't want to get hung up on identifying trends, but whatever kind of trading you're currently doing, or whatever strategies you use to determine a trend, or if you're a fundamental trader and you have reason to believe that news is coming out that could cause volatility or could cause a definitive move one way or another, that would be you know, something to think about when you're entering your hopper trade. And so then you enter all the trades when the hopper happens. The entry is always the same. It's when the MACD line crosses from above or below the 0 line going the opposite direction. And then the last thing to do is to have an idea what kind of exit strategy you want to use. And this is where it's helpful to just experiment with a couple of different techniques and then apply your favorite one to your favorite trading session. So we'll review a couple here in the next few minutes, so you can go to the next chart. So I have a few ideas for you about exit strategies. My favorite from the 5-minute charts is just to pick a number. My number happens to be 6, 5 or 6 pips of profit for short-term trading that I can get reliably over and over again with relatively limited exposure to risk. Is very appealing to me. It works well into my trading day. It doesn't interfere with any of my other long-term trades that I do for my 4-hour charts, and it's definable. I can set up into my trading session, look for a hopper. If I have a hopper, I can just set it up with a 5-pip profit target and really forget about it. And what I have found is that it has a very high success rate. And the reason for that is because the market doesn't really have to move very far before I can take a small little piece of it and be on my merry way. And it's just a nice addition to my trading day. A next exit idea is to exit on a trigger, and that involves the trigger line or the signal line, and we'll talk about that in a few moments. And the next suggestion is when the MACD line crosses to go back over the 0 line. So if we want to wait, sometimes that can take hours, sometimes that can take a day, even from the 5-minute charts. If the market really takes off in a trend, picks a direction, and that direction carries on for a length of time, this is a great strategy to employ, and it gives us a definitive idea of when to close the trade and helps us hold on during a trending activity. So I'm going to show you some examples of that. Other ideas are just to exit your trade at the end of 3 hours. This is also good if you get into any kind of trending activity during the first 3 hours of a trading session. Enter the trade, come back in 3 hours, close it. Of course, we're going to have a stop loss. I never want to lose more than 15 pips on a short-term trade. And I'm real quick to move my stop to break even, especially if I leave the trade open for 3 hours. If I can get my stop to break even because we're up over 5 pips, something like that, I can just walk away and come back in 3 hours and see what we have. It's like a fishing exit edition. So those are some different ideas about exiting these short-term hopper trades from the 5-minute charts. And if you go to the next trade, I have collected some examples just from the past 7 to 9 days. These are real hopper trades that I have collected to share with you. And Rob, you can advance to the next slide.
Jennifer.
So I'm just going to remind you that, okay, so this is an example when we enter the trade when the hopper happens, when the MACD crosses over 0, and these examples we're going to exit just with 5 pips. So it takes all the thought and all the concern out of the trade. I enter the trade with an intention to close the trade when I have 5 pips. Remember, I don't want to lose, I'm not willing to lose more than 15. You can go to the next slide.
And Jennifer, this would be a perfect time, as we did last night, to answer the question. Some people might want to trade when the candle closes, and others might not want to wait for that.
Right. Okay. That is something, that is a really regular question that comes up. Do you wait for the candle to close? And a lot of people do. I know that we just heard Boris talk about waiting for his candle to close on his RSI strategy. I don't wait for the candle to close. When you're trading from the shorter term chart, such as a 5-minute chart, it really would be okay to wait for the candle to close if that's what you're accustomed to doing. I don't like to do that because I'm looking for momentum timing, and I don't really want to wait around for any of that momentum to be spent while I'm trying to decide to get into the trade. So I will go ahead and enter my trade as soon as I see the MACD line crossing over that 0 level to go in my direction. But you need to understand that if by the time that candle closes, the MACD has changed its mind, the market has gone back up against me, and the candle didn't close, or by the time the candle closed, the MACD line was no longer below 0, I will just exit my trade. In most cases, it's going to be a very small amount of loss, a few pips perhaps, certainly not 15. But I enter every trade with my maximum amount that I'm going to lose is 15, but I rarely wait around for 15 pips. So if I get into a trade and it was a false entry because by the time the candle closes the signal's no longer there, I just close the trade, and most of the time it's not a problem, and on the few times that it is a problem, it's just really very few pips of loss, and then I'm right back in when the setup happens all over again. So that's how I handle making that decision about when the line crosses. I do not wait for a close. So in this example, this is a Euro-Pound chart from, it's a 5-minute chart from the U.S. session. And when the hopper happens, the MACD line crossed from above 0 to below 0, enter a trade. And in this instance, it wasn't really fast. It took some time. We had a little bit of drawdown, although not much, maybe just a couple of pips, because where the yellow highlighter is, that's where we enter the trade. In fact, I need to back up and say where the red vertical line goes through this chart, you can see that's where the MACD hopper happened. That's the candle that I enter the trade on. And I'm circled the area that is the amount of time it took in order for me to get 5 pips of profit. So that was in the circle. So my trade is over within, an hour, it looks like, maybe. And certainly I don't like to get in to a trade and barely get it. Of course, if I do, I'm happy that I got it at all, but I like to have a margin for error above and below my trade. So when the trade continues to go in my direction, that doesn't hurt my feelings at all. It actually makes me feel pretty good that I didn't just barely get the trade. But when I say pick a number, my number is 5 or 6 pips on these short-term trades. I know that Rob likes the number 20, and when he trades the hopper, he holds in there for 20 pips. And really, you can experiment with how you want to play it and how, what your number is, but the main thing is just that you know what you're looking for before you get into the trade. So you can go to the next chart, and I have a couple more examples. This is one of those examples where we barely got our 5 pips, and in this instance, as soon as the vertical red line shows you where the hopper happened, shows where I would have entered the sell trade, and as soon as I entered the sell trade, the next couple of candles moved against me, and there was up to 10 pips of drawdown, meaning that I had to sit with a negative trade, negative 10 pip trade before it turned and went in my direction and got me out with the 5 pips. In this instance, it barely got me out with 5 pips. And, there's really no way to call that this would have been a bad trade or a good trade. It's a perfect setup, and sometimes they go magnificently, and sometimes, we barely get them, and there's not enough margin for error, and sometimes we're going to have a loss. I don't mean to suggest that every single hopper trade is going to pay off, but 87% of the time they do. So you can go to the next slide, which is an example of my favorite kind of hopper trade, and the kind of hopper that I like to experience multiple times per week. But this is a pound-dollar 5-minute chart from the European session. The red vertical line marks where the hopper happened, where we enter the long trade, and there was no drawdown at all. Within 10 minutes I had my 5 pips and was a very happy camper. And I would like to just point out that in this particular instance, there was some trending activity in the market, and a different exit strategy could have been employed, and this hopper would have entered us into a trade that had a lot more potential. So we're going to talk about some strategies for closing a trade and trying to capture a little bit more of that potential if you're inclined to hold on for a higher profit target. You can go to the next chart. So this next example is going to be an exit on a trigger. And you can go to the next slide. The trigger is when the MACD line crosses back through its signal line. So in this chart, the red vertical line going through my chart shows where the hopper happened. That's where I enter a trade to buy. And where the green circle is, that's the amount of time that it took me to collect my 5 pip profit target. If I wanted to hold on for something higher, the next exit strategy is called a trigger, and that happens when the MACD line crosses over the red trigger line. Sometimes that gives us a much higher profit target. Of course, not every time. Sometimes you can just get your 5 pips and be happy on your way. If you want to commit your 3 hours to this trading strategy, then you can sit with your trade and watch for the trigger lines to cross, giving you an indication when to get out of this trade. And in this instance, the profit target would have been 20 pips. And then this is a dollar CAD chart, also from the European session, and a couple of things that we can talk about on this chart. The first thing that I want to point out is where you look at the red vertical line going through the chart, you can see that the hopper happened actually before my trading session. So I show up to trade, it's 6 o'clock, that would be the London session. I already wrote it on the chart. That's the European session, and that would be my selected trading session for this trade, and I get to my computer and I see that the hopper has already happened. Do I have to miss it now? And the answer is no. So here's what I want to show you. When the hopper happened and the MACD line crossed from above 0 to below 0, there wasn't really much momentum going on in the market. You can see that price action is small candles sort of going sideways, and the MACD line, the trigger line, the histogram lines are all pretty flat. There's no indication of momentum. It's like going surfing on that day and you get in the water and there's nothing happening. There are no waves. It's a calm day on the water and there's no surfing to be had. So similarly, I'm going to wait for the MACD to indicate that it's got some momentum building up. And so what I did was I drew like a support resistance line, a support line underneath the lowest candle that it made prior to the open of the session when the hopper happened. And my entry for this trade would come when price again broke through that level, and coinciding with that moment in time, the hopper is showing me that, the MACD is showing me that it's got some momentum building up as the histogram bars are now beginning to move and the MACD line departs from its trigger line on its downward descent. It's just a visual representation that didn't get timed exactly perfectly, and I don't have to be super legalistic about this indicator, and that's why this is a great chart to share with you. The MACD is giving me the message to hold on a few minutes. We don't have momentum happening just yet, and you know, but that doesn't mean you have to miss the whole entire trade. So we enter the trade where the momentum starts to build at the edge of that yellow highlighted area into the red circled area. That would be my 5 pips of profit within those few candles there. And then exiting this trade on a trigger would happen when the MACD line crossed over its signal line. Rob, if you want to point to that. That is the trigger that would trigger an exit, giving us probably about 15 pips of profit on this particular trade. So the trigger lines crossing give us a little bit more time in the trade, in the hopper trade, and sometimes that can result in a higher profit target. So you can go to the next slide. And then the next examples I want to show you are exiting the trade when the MACD line actually crosses back over the 0 line, not just the trigger, but back over the 0 line. And this can be applied to any time frame that you want to trade this trade. This is when we're entering a hopper looking for higher profit targets, and this is a great method, exit strategy to employ when you think you're entering into an environment where you're going to experience some trending activity in the market. So you can go to the next chart. I think the next chart is a 15-minute chart on the euro dollar is. And this was a trade that opened up over the course of 2 days. So we entered this long trade when the hopper happened, which is highlighted when the MACD line crossed to go from below to above the zero level. And that's where the red vertical line is in this chart. And we want to hold this trade open and not exit with 5 pips and not exit when the trigger on a trigger when the trigger lines cross, but we want to exit when the MACD line actually crossed to go back below zero level. And in this instance, it turned out 170 pips. This is a very recent trade that just happened this week, and you know, this is just a sensational. If you're strong-hearted and you can sit in your trades for a long time, this is a great strategy. If you happen to catch a wave of trending activity, the MACD is going to give you an indication of when it's a good time to get out of that wave and take the pips that you have and go home. so this is one of my favorite trading methodologies. It doesn't have to be a trend that lasts for 52 days. It can be, you know, the short-term trending activity that we see within our daily charts every day. And then you can go to the next chart, and I just want to point out that holding on to a trade until the MACD line crosses over the zero line does not always result in a higher profit target. If the trend doesn't happen and we're just going into a range, it very well may get you out at break even right where you started. Okay, so the next few charts I want to share with you are going to be where the hopper gets bigger, looking at some 1 hour and 4 hour charts, and we're almost done, but I just have a few more examples to show you how you can use this tool in a different environment. The rules change a little bit. First of all, you don't have to limit yourself to the first 3 hours of a trading session. We're not looking to just scalp 5 pips off the initial activity of the day. We need a little bit more wiggle room, so I use up to 30 pips stop loss. And my conservative targets are a little bit higher, but not much, really, only 10 to 20 pips. But you can employ all the other strategies that we just talked about this morning, exiting on a trigger or exiting when the MACD line crosses back. If we have even just ranging activity, the trigger gives us a little bit more than our conservative profit targets at 10 to 20 pips. And if we have any kind of trending activity in the market, the MACD line crossing back over zero gives us an opportunity to hold on for a higher price. Going to the higher time frame charts means that your trades are going to last longer, though, so that just depends on what kind of trading you like to perform. So you can go to the next chart. This is a 1 hour chart for the US dollar, Canadian dollar. These trades were entered on a hopper. The hopper happens when the MACD line crosses from below zero to above zero, where the yellow highlighted lines are. The first trade is a long trade, good for 34 pips, exited on a trigger when the MACD line crossed back over at signal line. The second trade is a sell trade when the hopper crosses back over at zero line, and holding that trade until the trigger signals an exit would be 50 pips. Just to show you how these play out, and you can see that they last for about 24 hours in these two examples. You can go to the next chart. And this is a chart I just wanted to demonstrate that holding on until the MACD line goes back over zero does not always result in a higher profit target. It just depends on if the market is really ripping off in a trend, or if it's ranging around and up and down, then it's not necessarily going to give you a higher profit target. In this instance, we had 37 pips right at the first trigger exit. So, you know, I'm a pretty conservative trader. I like to get the amounts of profit that I can repeat, and I like to repeat, you know, 5 or 6 pips, and if I know that that's what I can do over and over again, that makes me feel really secure as a trader, and I can make plans around that. Some traders just they don't mind not having something that they repeat every time, and they hold on for a higher profit target, and sometimes they get it and sometimes they don't. For my particular trading mentality, if I'm holding on for a higher profit target and I don't get it, I feel frustrated. So it just depends on how you work and how you like to trade. But I just wanted to not leave you with the impression that holding on until the MACD line crosses back below zero is going to give you a higher amount of profit every time. Sometimes it does and sometimes it doesn't. So you can go to the next slide. This is an Aussie CAD chart. Just a really beautiful hopper entry when the MACD line crossed from above to below zero, putting us into a sell trade. Exiting on the first trigger, it was 127 pips. Just a really clean chart, a really clean entry and exit. And of course, if you had held in that trade longer, the very next candle, the very next two candles were pretty solid bear candles. And people ask me all the time, don't you wish you would have stayed in that trade a little bit longer? And what I want to share with you is that I have a lot of calm and a lot of peace about my trading strategy because I know when I'm going to get in, I know what my plan is for exiting the trade. And, you know, at the end of the day, when I made 127 pips, I'm ecstatic. I don't feel bad at all that I could have got another 50 pips out of this trade. I feel very happy that I followed a plan and it turned out a profit for me.
I'm happy on days when I can end with 12.7.
Yeah. Well, I can one-up you on that and say that I'm very happy when I can find repeatable trades for 5 pips. If I can only get 5 pips once in a while, I wouldn't be very happy. But if I know I can repeat that setup over and over again, and it's a relatively small amount of risk for something that I can repeat on a high frequency, I'm very, very satisfied with that. And I think it's important as a trader, we're solitary creatures. We're with our computers, and you know we have this human nature. We're out to get pips, and sometimes you can sabotage your own success, and in my opinion, more importantly, your own peace of mind about what you're accomplishing, and knowing that you've accomplished something at the end of the day, as opposed to just saying, well, I made 127 pips, but dang it, I could have made 150. You know, if you let that creep in, it's just going to ruin your trading mind. And I only know this from experience, so I want to share with you ways to keep your mind and keep your sanity while you go forward in this industry. So you can go to the next slide, and we're just about done. This is a chart that one of my friends on Twitter shared with me. What he did was he employed the hopper strategy onto his current trading strategy. Now I don't know what his current trading strategy is, but I can see some support resistance lines on his chart. And he entered this trade on a hopper when the MACD crossed from below zero to above zero. Interestingly, at the same time, price was lifting up off of his support line as he got into that trade. And then he exited this trade actually on the second trigger when price ran into his resistance line. And he has shared numerous charts with me on Twitter, which I hope you will do too if you use the hashtag hopper trade. It's going to be real easy for other hopper traders to find the charts that you share and see how you've taken this simple tool and applied it to your charts, and see what kind of assist you can get to your trading, and see what you come up with in the hopper trade. So I think that's all I have to share with you, and I would happily turn the microphone over to Rob and see what he's done with the hopper trade.
Well, very much appreciated, Jennifer. This is great stuff. Lots of good questions came in, and you answered most of them without even having to address them. What a great time it is. It's fun to listen to. It's fun to trade. And between what you've shared and what Boris has shared, we have a whole lot of material that we can implement for a long time to come. I love what you said about the important thing in a trading system isn't the number of pips it gets per trade. It's whether or not it's repeatedly possible to profit from the strategy, whatever the target is. And the fact that it's repeatable on a daily basis is a great idea. There's one question that came up, and I'm sure it's on the minds of other people here today. When can you trade this trading strategy? Remember, Jennifer said during the first 3 hours of any trading session. So go on the web if you're not familiar with when these trading sessions start, and type in currency market sessions. And just type that into Google and look it up, and focus on the first 3 hours of any individual trading session. Or continue to come to these webinars that we do, and we'll continue to discuss optimal strategies and times. We'll tell you how to get more information about when you can trade this live with Jennifer for 30 days in a row. I took what Jennifer taught me on the hopper, and I turned it into a little strategy of my own with a filter. I'd like to spend 4 minutes right now discussing that with you, and then I'd like to invite you to trade alongside Jennifer for 90 days as she teaches the hopper trade and 4 additional strategies that are based on it. Here we go. This is the red hopper. I spent the last month and a half, almost 2 months, back testing a strategy that I called the red hopper. I included and added a filter to the standard hopper trade, not because it was necessary, but simply because it appealed to me based on my own personal trading experience. It produced about 165 trades so far this year in 2012 for a total profit of $14,123, trading one standard lot at a time. In other words, it made 1,412 pips over 165 trades taken over the course of the last 10 months. This is a minimized screenshot of all of the trades that it produced in an Excel spreadsheet. I'll make this available at 15minuteforex.net/invitation to those of you who want to watch the archives of this and the recording of this presentation and see the spreadsheet. You can see the Excel spreadsheet that contains the back testing that I did. So you can see every single trade example that this methodology produced. The red hopper was traded on a euro-dollar chart, a 15-minute chart, and as I mentioned, produced just over 1,400 pips in 2012. The biggest loss that it took was 50 pips. The biggest gain that it took was 70 pips. That means the average winner was bigger than the average loser, and it had a better than 60% win rate. You're going to have your own win rate on all of these strategies, depending on how much experience you bring to the table, how comfortable you are with pressure and risk, and what time of day that you are available to trade. I can't answer all of those questions for you, but theoretically speaking, if you were available 24 hours a day to trade all of the examples that popped up, these are what the statistics look like. Let me show you a few examples of what these charts and these trades look like. You can see a green arrow pointing at a candle with a red line through it on the screen in front of you right now. That's a sell trade on the red hopper. This is a standard hopper trade with a stochastic filter that we'll talk about in a moment. This was good for 30 pips. Here's a sell trade where you see the green arrow pointing at the candle with the red line running through it. That's a sell trade that was good for 70 pips. Here's a buy trade on the 15-minute chart where you see the green arrow pointing at the candle with the red line going through it. And this was good for 30 pips before it exited. Some of these trades were good for way more than that, but the methodology exited at these numbers that I'm showing you here on the screen. Here's an example of a buy trade entered where you see the candle with the red line drawn through it at the bottom of your screen. That was good for 60 pips. Then we had a 40-pip buy trade. These are just the last 4 or 5 red hopper trades with none excluded. These are just the last 4 or 5 that existed. Remember, it had about a 50-pip maximum loss. It never had a loss bigger than that in 2012. That was the stop loss. Sometimes it took a loss that was smaller than that. And the largest gain that it took was 70. It would max out at 70 pips. And the win percentage for me was actually in the 60s. If you only traded Thursdays and Tuesdays, which were really profitable days in 2012, the win percentage went way up, and the average size of the winner versus the average size of the loser went way up as well. The red hopper has already been automated for MetaTrader 4, and we've already started to distribute the indicator to the members of the hopper trading course coming up in November. Not only the indicator that goes with it, but an expert advisor that can trade this methodology automatically. I mentioned a moment ago, if you were able to trade it automatically 24 hours a day, it would produce a certain number of statistics. Well, we automated it for that reason. We also automated Jennifer's hopper trade and built an indicator to show it on your charts and send you an alert to your phone. And we're also in the process, as we usually do with every trading course that we teach, building these indicators and the additional ones that come with it for Thinkorswim, eSignal, TradeStation, FXCM charts, and NinjaTrader as well. On November 1st, 2012, Jennifer and I will lead a course that lasts for 90 days. 2 months of teaching you the hopper, the red hopper, the golden hopper, the trigger finger, and a variety of other hopper derivative trading systems that produce about 300 to 400 trades per month across a wide universe of currency pairs. We'll teach those classes in every market session, meaning We'll teach a session on a Tuesday in the morning, in the afternoon, and in the evening so that no matter where you are in the world, you'll be able to catch that session live and get the instruction and be able to get your questions answered. We have 18 webinars in November at all different times of the day, and then we have 2 full days of training in December online, so you can just come for a full day, and then we have 30 sessions of live trading in January. You can get more information about that at 15minuteforex.net/invitation, and you'll get an access to a special discount that expires in 36 hours from right now. In 36 hours, the price goes up by a factor of 2. The price doubles. We're trying to fill the class by tomorrow so we can start sending out instruction and indicators right away. And the class starts on November 1st, 2012. We invite you to be a part of that class. I guarantee it's going to be worth your time. There's a huge return on your investment for taking part in this. This doesn't cost $1,000. It doesn't cost $2,000. This is the cost of what most people spend on a few trading books in just the course of 1 year. So we're thrilled that you've joined us today. I'm thrilled that Boris has been here. He's been a good friend of mine in the world of trading for years now. I'm thrilled that Jennifer's taken the time out of her morning. She got up at 5:30 in the morning today where she is to come and teach you this methodology for free. Much of what Boris and Jennifer will teach you is free. Twitter's free. Their stream includes trade ideas, ebooks, charts, analysis, economic forecasts, webinars. But some of what Boris does and some of what Jennifer does is specialized and takes hours and days to train someone to do. And in those instances, they charge what is a very reasonable fee designed to help you get a return on your investment within a very short period of time after signing up on it. Remember that trading currency is risky and past performance is no indicator of future results. And trading involves a substantial risk of loss and is not suitable for everyone. And please don't trade with money that you cannot afford to lose. But given those risk disclaimers, we invite you to take a closer look at what Boris has to offer and what Jennifer is doing starting on November 1st. Remember, the discounts expire within 36 hours from the webinar today, and that's designed to fill up the classes at the lowest possible price for the largest number of people. Jennifer, I want to say thank you for getting up early and teaching us the hopper again.
Oh, it was my pleasure. Thank you guys for inviting me to share time with you this morning.
And Boris, it's always a pleasure. You have so much enthusiasm for the market. In all of these years, I've never heard you speak about the market with anything less than maximum overdrive enthusiasm.
Well, that's the way I trade. That's the way I live. So thank you. You guys know I love it.
That's awesome.
We thank you for your time today, everyone. We've recorded the webinar. You don't need to ask us for the recording. We'll send it to your email address within 24 hours. In fact, if you go to 15minuteforex.net/invitation, you can see a recording of Jennifer's hopper presentation from last night. And if you follow Boris on Twitter, or me, or Jennifer on Twitter, you'll get a link distributed to you even sooner than that. But by tonight or tomorrow morning, I will send you an email, Boris will send you an email, Jennifer will send you an email. We will inundate you with emails telling you about these courses that are coming up next and giving you the full recording to these webinars that we've done over the last 2 days. Join us in November. Get ready for an email coming out soon for a webinar on risk management featuring Boris and myself. And in the meantime, we invite you to take a look at those websites. Have a great day, Boris. Thanks for being here, and thank you, Jennifer, also.
Thanks very much, guys. Just last piece of note, I put up the link to the Nicholas Darvis's PDF of Nicholas Darvis's book on my Twitter. So if you don't follow me, just join and follow me and be able to get that link. I'll talk to you guys later.